This is like the worst headline you could possibly have. Wall Street expect rally to keep going.
Yeah.
Just don't, even if you think it, don't print it. Don't say that.
Compressed in 1 year will be joy, depression, and rally, right? I think just like last year, in 2025, we had a terrible start. People got very gloomy. Then we had a nice rally. Because, the market will test the new Fed. That probably is the reason we have some fear this year. But there's a lot of things to be optimistic about. The tariffs are anniversarying, the Fed is cutting, and the ISM could finally turn back above 50, and that's good news. And the Mag 7 should still keep producing good earnings growth. And then the financials and small caps. So it's like a lot of things that could go right in the market. I think earnings will do even better.
Financial analyst and Bitcoin bull Tom Lee breaks down what's really happening in the market and why it matters for Bitcoin. He recently shared his take on the current economic uncertainty. With tariffs and recession fears creating market volatility, Lee suggests that a major market rally is on the horizon, and that's where Bitcoin comes in. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. Bitcoin's price sits just over $93,000, up almost 4% in the past month. Lee points out that markets have historically bottomed before major events resolve, so we could see a sharp recovery in the next week. The bottom line, Bitcoin's next big move depends on how this plays out. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
In 2026, if Bitcoin gets to 200 or 250,000, it would be breaking the 4-year cycle. So that's sort of part of our view is that this, if you follow the 4-year cycle, Bitcoin should be down this year. But I think that there's tailwinds that are building. And part of it is we kind of reset leverage on October 10th with that big shock.
Right.
And now I think there is still institutional adoption taking place, and Wall Street is still building a lot of products on the blockchain. And then we have U.S. government support. So I think these are tailwinds that help Bitcoin recover this year.
And even though people have pointed out the divergence from gold and silver, you think with gold and silver doing well, eventually Bitcoin benefits from that trade?
Yeah, it does look like gold rallies typically lead Bitcoin rallies. So I think it's been healthy for gold to rally. Part of it's, dollar debasement. And now with monetary easing, those are things that are supportive of crypto to follow. And as you know, crypto adoption rates are still quite low. So crypto has sort of an exponential growth opportunity because the adoption is increasing.
You even think that an improving ISM is bullish for crypto?
It is. For whatever hard to explain reason, we found that copper to gold price ratio, when that rises, that coincides with Bitcoin rallying. And we also found that the ISM, as it moves from below 50 to its peak, has coincided with Bitcoin entering its sort of rally stage. So
the move that we saw, the broadening of the market into even small caps, and does that continue? Is that necessary?
I think it's healthy and it's important. The small caps made an all-time high last year, which is great because that's been a long time coming. And lower interest rates helps them, monetary easing. Earnings growth is starting to look better. And if we have mergers, I think all of these are tailwinds for small caps.
I think the markets are a bit nervous in crypto land and equity world because one, we've had a government shutdown. And then there's been doubts about AI valuations and people raising questions about that. So AI stocks have corrected and many growth stocks have corrected. And then in crypto specifically, it's been dealing with two issues. One is there was this big liquidation event on October 10th, one that really was a larger liquidation event than anything seen in history. And the second is because crypto is risk on, I think markets are really struggling with what the Fed's going to signal on December, because if you end up with a hawkish Fed, it gets crypto investors very nervous. I think that's all creating this downside pressure. But Ethereum is a smart contract platform, so it differs from Bitcoin, which is a store of value, and in many ways its virtue is that it's inert, and it represents digital gold and a good store of value. Ethereum, on the other hand, is, because it's a smart contract platform, is really the rails where I think a lot of things are going to be built. And one of the big breakouts this year has been stable coins, but it's also been things like prediction markets, and now talk about tokenizing more than just dollars, but equities and real estate and alternative assets and other assets. And a lot of that will be built on Ethereum or layer 2. So I think from a perspective of what the ecosystem looks like, Ethereum is a place where there's a lot of activity taking place, and you can measure it by transaction volumes or transactions per second, or even value locked on the chain. And these are all rising. So to us, I think it's a story that still is in the earliest stages, and one of the reasons we consider it a super cycle. The industry did suffer a big liquidation event that I think crippled many players and wiped out many accounts. So I think that this, just like in 2022 or in 2020, it does take a few weeks for the industry to sort of find its footing. And I think that's why crypto prices have lagged here. And it does have the signs of that maybe a market maker or two actually is unable to provide market liquidity. And as you know, as liquidity contracts, it's the same thing as the central bank tightening. So it's almost like crypto QT. I think the other thing the markets are grappling with is people talking about the 4-year cycle. Many are convinced that Bitcoin prices have peaked. So in some ways, Bitcoin being the blue chip and the bellwether is important for crypto, because if Bitcoin makes a new high this year, then it really obviates the fact that there is a 4-year cycle. And so it's, to me, between now and year end, I'm pretty bullish on stocks, but as markets rally, I think that's going to help propel Bitcoin to an all-time high.
Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Hugin reassures that a long-expected surge awaits as we head into the first few months of 2026. Now we'll hear Tom Lee break down what implications the Fed rate cuts have and the current risks the market faces.
In our chairman's message last month, we addressed how gold versus Wall Street grew post-1971. So 1971 was when Nixon formally withdrew the U.S. from the gold standard. The immediate beneficiary was there was demand and a market to own gold. And so people would say that was your, first implication. But what we wrote about and talked about in our message was that in 1971, the dollar became fully synthetic because it was no longer backed by anything. And so there was risk that the world would go off the dollar standard. So in stepped Wall Street to create products to propagate the future of Wall Street, including, and we listed, I think, 14 products that emerged over the next decade, from money market funds to credit to mortgage-backed securities to futures, etc. And dollar dominance by the end of that period went from 27% of GDP terms, but to 57% of central bank reserves and 80% of financial transaction quotes. So Wall Street created products that made the dollar dominant, and the market cap of equities today is 40 trillion compared to 2 trillion for gold. So in other words, gold is 5% of all available assets. And so in 2025, we think everything is now becoming synthetic or tokenized, not synthetic. So as we move not just dollars onto the blockchain, which is stablecoins, but we'll move stocks and real estate, dollar dominance is going to be the opportunity of Ethereum. So digital gold is Bitcoin. And so in that world, we believe Ethereum could flip Bitcoin, similar to how Wall Street and equities flipped gold post 71. Now, that is just our working theory, because I am still a Bitcoin bull. So I'm very bullish on Bitcoin, and I believe your targets for Bitcoin are actually reachable. So we think Bitcoin fair value should at least be 1.5 to 2.1 million. but we can see higher values. But that would, of course, provide upside to a neutral smart contract platform where a lot of Wall Street will innovate of real world assets. There is existential questions that'll emerge on proof of stake, but it's also, I think, going to happen with proof of work, because we know Bitcoin mining, for instance, is becoming concentrated in corporate. In fact, I think this year there was one mining operation that actually had won 6 successive block rewards, which is a high level of concentration. And as you know, as we get closer to 2140, the block reward is going to be so small that it may not provide the economic incentives to actually continue mining, which would represent greater concentration. So I don't know if at that point Bitcoin miners start to wrap Bitcoin to generate yield or other innovations. But proof of stake, you're right, is, because staking is an operational activity in security, if you have people reduce their staking, you weaken the security of the network. I think that's where the DATs are actually helping provide permanent capital.
Tom Lee challenges the conventional economic metrics, asserting that these metrics are often manipulated to paint a specific narrative, like labor statistics and inflation figures. The ongoing adoption of Bitcoin by governments, institutions, and media signifies a broader recognition of its value. However, Lee asserts this journey is just the beginning, comparing the initial years to the current widespread interest and investment, with a giant spotlight on Bitcoin ETFs. Lee highlights this being a significant development in the financial ecosystem, selectively measured to create desired effects rather than reflecting the true state of the economy. In this context, Bitcoin emerges as an alternative, detached from the manipulations of the conventional economic sphere. Lee also highlights that established corporations like Apple, Amazon, and Google will use their established relationships acquired over decades to swiftly acquire substantial amounts of Bitcoin through a spot ETF, bypassing the cumbersome processes involved in procuring the actual commodity. This disparity underscores the transformative power of cryptocurrencies in traditional financial institutions. Michael Saylor underscores the importance of embracing digital currencies as the economic landscape is changing rapidly, and urges investors to leverage Bitcoin's potential to secure a more prosperous financial future. He says the current volatility is a natural phase of Bitcoin's maturation and could present a once-in-a-lifetime investment opportunity. Bitcoin's decentralized nature and finite supply make it uniquely positioned to withstand economic turbulence, asserting that it will eventually outcompete traditional fiat currencies. His conviction? Bitcoin isn't just a speculative asset, it's the future of money, and those who invest now could be part of a financial revolution. He's practically waving the green flag on what he thinks could be the most explosive crypto cycle yet. All the classic signs are flashing, running straight through 2026. What do you think about the latest interview with Tom Lee? And how do you think Bitcoin's trajectory in the coming months will impact the crypto market and the world of investing?